Welcome back to the channel. I'm Foreman, and today I'm going to be talking about the biggest mistake that I've made so far in 2021. I hope that the mistake I reveal today may help you in your own investment journeys, no matter how far in that journey you are. You may have just started investing and looking at buying individual equities, or you may be 20, 30 years down the line from where I am. I hope that this mistake can at least be reflectful, because I imagine that especially over that longer period of time, it might become more difficult to see your own shortcomings, and I hope that if this is one of them that you may see, that we can all learn from it together. And if you like the video, please drop one of these to help beat that YouTube algorithm, as it is much appreciated. So to start, what is this mistake I've made, and what's really going on with the situation? Well, in truth, the mistake I made was FOMO, which is the fear of missing out. You may be wondering though, although because I don't really show too much emotion when investing in the markets, and my mistake in this particular way was that I didn't really think much about it. I assumed that if I had the fear of missing out, I would have felt perhaps some form of anxiety. I would have felt the need to buy more shares. Instead, I just instinctively bought, and that's the issue I had, is that I just instinctively kept buying shares. And don't get me wrong, it wasn't the worst decision I could have made, but it was a mistake in hindsight. But then again, this video, before we continue going on about this mistake, it's very important to flag now. Everything is easy in hindsight. There was a comment that said that it's easy to win Sunday's lotto with Monday's newspaper. Whoever had written that has really stuck with me. Regardless, the idea is here that it is easy to look at these mistakes in hindsight and easy to avoid them in hindsight, because we already know the outcome or the ending result. In my way, I feel that I'm going to try and reflect on this, notice that I've made a mistake, and then see what I'm going to do with the future. And then hopefully this could mean that it will work for others, or perhaps they can identify it in themselves too. So as I said, with the fear of missing out, let's give some backstory to this. I was buying a stock. I'd bought into the speculation. This speculation given them a lot of strong share price drivers. They were already a very competitive company, and to be honest, they still are. They have considerable advantages over others in their industry, and they have very high margins to boast. You may already know the name of the stock. This company is Argo Blockchain, and don't get me wrong, I'm not saying this investment is a mistake. Instead, I'm saying my actions towards the share were a mistake. What I had done wrong is that I'd bought too early. What I'd shown is that I didn't have discipline or patience. This is one of the key lessons I feel that every investor must learn, and that's where you start to build cash positions. You keep some of your powder dry so that you can take advantage of when there's a dip in the markets. In this particular situation, I feel that Argo Blockchain was very much hyped up by speculation. We had Bitcoin rising to new all-time highs. In case you didn't know, they are a Bitcoin mining company. And so when Bitcoin rises, their future expected multiples of revenue and earnings is going to increase too. Everyone got excited, and there was this speculation over the uplisting to the NASDAQ. They were already dual listed, so an uplisting to the NASDAQ would put them against competitors in their industry that are on very similar financial or fundamentals, meaning that Argo Blockchain here would have had quite a significant upside if they were to be listed. However, this was never confirmed nor denied by the management, and that's the issue I had. I bought into this, and realistically, I should have really looked back, because they were saying we can't talk about NASDAQ, or they were avoiding the questions entirely. Whereas recently, about 2-3 weeks ago, they then announced that they are now exploring options to list on another secondary market. What this has shown me is it's left a bad taste for the management of the company. But what I'd done prior to that is thinking, okay, well, the NASDAQ listing could be imminent, so I'm going to buy shares, because this listing could easily double, triple shares. So what I'm going to do is I'm going to keep buying shares, build up the position so that I've got enough shares just in case the next day or the next week it then has that NASDAQ listing news and shares go up. In reality, I should have been calm about it. I should have said, right, okay, well, shares are pushing up incredibly high, but what goes up must come back down, and that there should be time here to relax. I did originally buy some shares at a fairly good price, around about £1 per share. However, I started to heavily average up the shares around about £2 and more, which in truth was both transferring a position using BED and ISA out of a general investment account. That would represent now 1/4 of my position. However, I should have still been patient. I had taken a 100% gain outside of my ISA in a general investment account. I didn't necessarily need to buy back into the shares, but it was that fear of missing out that kicked in that made me want to do it. What I mean here is that just because I bought more shares. This doesn't mean that this is a bad company to hold shares in. I feel that I bought perhaps too early, or not too early, perhaps too late. Regardless, this is semantics. I felt that I bought at a poor time. If instead I decided, okay, you know what, I'll hold some cash. Shares have gone up a lot and I will wait. I will be patient to see what happens with the shares, to get some more confirmation on the news. Oh well, if I miss out on some of the gains, what can you do? You can't always get all these gains. But then, at least if I'd have bought in after that, I would have had a more secure and less risky position. And this ties into another issue because I even noticed this and acknowledged it. On my Twitter page, I had said that this is reaching a high level in my portfolio and that I will not buy any more shares. Shares then dipped to quite an attractive price and then I overthrew that, and that was days later than when I had said that. What I'd done is I continued to average down when, don't get me wrong, I do believe averaging down was likely the right move, but because I already had such a substantial position size relative to the rest of the investments in my portfolio, it certainly wasn't the one for myself, especially because Bitcoin I like, but I'm not massively bullish on, yet my portfolio would suggest that I have a very strong bull case for the likes of Bitcoin adoption in the future, and why Argo blockchain is going to do well in particular, which I don't think accurately represents my conviction. My conviction in the stock is strong. I believe they are the best in the industry, but the industry overall perhaps isn't one that I am most or as fond of as other stocks in my portfolio. And if you'd like to sign up to Curve and get £5 of cash to spend, then use my link in the description down below. You may be wondering, okay, so my Argo blockchain position, what's going on there? Because I've said it's a mistake. Why shouldn't I just cut my losses and sell? And this is a question I've answered quite a lot. I'm not going to cut my losses. I acknowledge it was a mistake and I bought too early, and I definitely had FOMO with these shares. However, I still believe there are strong share price drivers in the company that can certainly boost the shares above my average price and perhaps even more. That means that cutting my losses now would be a waste of the opportunity, and this opportunity cost I really don't think could be invested better elsewhere that I'm currently aware of. Hence why I still hold the position despite acknowledging that I'd made a mistake in the past with a lack of patience. In future, I think I'm going to try, and as I said this before, to be more disciplined, to be more patient, to really sit back and look at the shares. Okay, shares have dropped. Yes, I can average a bit more into the shares, but should I keep going, or should I sit back again, see how the shares move? Oh, if shares have gone back up slightly, okay, well I bought some on the dip and I've made some money. If not, maybe buy a little bit more. And if that would be a nice cycle to have. But it also shows that I should definitely have a cash position in the portfolio so that I would be available or would be able to take advantage of the dips. With my position itself, I'm going to keep holding. As I've said, I'm going to let the shares run up. I still think they have those drivers. They've got a Texas facility being built, and their listing on the NASDAQ is likely going to happen at some point now that it has been more or less confirmed. And so I'm going to be patient. I'm going to let shares rise again and then take a lot of profits, trim back the position to where it really represents my conviction in the stock, because realistically I didn't have too high of a conviction overall. And if you'd like to see my free UK stocks to buy in August 2021, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a great day.